Welcome to our channel, Master Trader 1949X. Today's video is on IPO, that is Initial Public Offering. But before that, we request you to go through the disclaimer shown on your screen. What is an IPO? When a private company first sells shares of stock to the public, this process is known as an Initial Public Offering, IPO. In essence, an IPO means that a company's ownership is transitioning from private ownership to public ownership. Companies choose to become publicly traded for several reasons, that is, first, going public enables companies to raise substantial funds by selling shares to the public. These funds can support various endeavors like expansion, research, debt management, or acquisitions. Second is that public listing provides shareholders, including founders and early investors, with the ability to sell their shares on the stock market, offering an exit strategy and converting their investments into cash. Thirdly, an IPO establishes a market value for a company's shares, serving as a reference point for future fundraising, mergers, acquisitions, and partnerships. Publicly traded status boosts a company's visibility and reputation, attracting customers, partners, and top talent. It also elevates brand recognition and may generate media interest. Lastly, going public provides an exit strategy for early investors, founders, and employees with stock options, allowing them to monetize their holdings. You can find information about new upcoming IPOs from financial news websites, stock exchanges, financial publications, brokerage firms' websites, and search engines. But the question is, how to apply for correct IPO? Two key factors that one may look into are first, QIB subscription. QIBs are a category of investors in the initial public offering of a company. They are large financial institutions that possess significant expertise in the equity market and are capable of investing large amounts of money in a company. Higher the QIB subscription, higher is the chance of potential gains by applying in IPO. Second is grey market premium. GMP refers to the difference between the price of shares in the unofficial or secondary market and the price at which those shares were offered during an IPO. In other words, it's the premium that investors are willing to pay for shares before they officially start trading on the stock exchange. Higher the GMP, higher is the potential of gain at listing. Now we will show, with the help of few examples, how QIB data and GMP might help you overview if the IPO you apply in will be profitable or not. Personally, we like to focus on only those IPO whose first, QIB is more than 40 to 50 times. Second, GMP is more than 40 to 50% of issue price. First example that we take is of LIC, a well-reputed public sector company. Here we see QIB is only 2.83 times. GMP is merely 8 rupees. Issue price was 949 rupees. It was listed at 872 rupees, which is 8.11% lower than allotment price. We should not have applied for its IPO at first place, reason being, QIB subscription is very low and GMP should have been at least 379 rupees and 60 paise, that is 40% of 949 rupees, which is the issue price. The second company is Paytm. In this case, the QIB subscription is only 2.79 times and the GMP stands at just 40 rupees. The issue price was 2,150 rupees, with a listing at 1,950 rupees, reflecting a minus 9.30% decrease from the allotment price. Applying for its IPO initially wasn't advisable due to the low QIB subscription and the GMP being less than the expected 860 rupees, which is 40% of the issue price. In the case of Kalyan Jewellers, the QIB subscription is merely 2.76 times, and the GMP is only 9 rupees. The issue price stood at 87 rupees, while the listing price was 73 rupee and 95 paisa, marking a minus 15% decrease from the allotment price. Applying for its IPO wasn't recommended due to the low QIB subscription and the GMP falling short of the expected 34 rupees and 80 paise, which represents 40% of the issue price. In contrast to the earlier mentioned examples, let's consider companies which gave amazing listing gains. One such company is Mrs. Bector's Food. QIB had heavily subscribed 176.85 times. GMP was 220 rupees, which is more than 40% of its issue price of 288 rupees against listing of 505 rupees. Overall, its listing was 75.35% more than issue price. Its data shows it was an amazing IPO to apply. Another notable example is Paras Defense and Space Technology. The QIB subscription soared to a staggering 169.65 times, while the GMP reached 210 rupees, exceeding 40% of its issue price of 175 rupees, against a listing of 475 rupees. Overall, its listing marked a remarkable 171.43% increase over the issue price. The data indicates that it was an exceptional IPO to consider applying for. Another noteworthy example is Tata Technologies. The QIB subscription surged to an impressive 203.41 times, with the GMP reaching 414 rupees, exceeding 40% of its issue price of 500 rupees. Upon listing at 1,199 rupees and 95 paise, its overall increase from the issue price was a remarkable 139.99%. These figures indicate that it was an exceptional IPO worth considering for investment. After analyzing these examples, one can infer that the higher the GMP and QIB subscription, the greater the likelihood of listing gains. Furthermore, QIB data is most reliable on the final day of an IPO subscription window, typically around 3 hours before the IPO closes, as many QIBs submit their applications at the last moment and cannot withdraw once applied. This also suggests that IPO allotment is not based on a first-come first-served basis. Therefore, there is no need to rush to apply for an IPO. It is advisable to apply on the last day, taking into account the aforementioned factors. Another additional factor one may consider before investing in IPO is DRHP. A draft red herring prospectus is a document filed by a company with the Securities and Exchange Board of India when it intends to issue shares to the public through an IPO. The DRHP provides detailed information about the company, its financials, operations, management, and the proposed offering. It serves as a disclosure document for potential investors, allowing them to evaluate the company and make informed investment decisions. To maximize the chances of IPO allotment, individuals should consider applying through multiple IPO accounts, especially for highly subscribed IPOs. Doing so can significantly enhance the likelihood of securing an IPO allotment. Additionally, some investors may choose to apply for an IPO solely for potential listing gains rather than long-term investment purposes. Thus we come to an end of our video on IPO. Hope you liked our video. Don't forget to like, share and subscribe to our channel. Press the bell icon for updates.